Let's look at the market for now. This is going to be a very quick trade recap on what happened this week and what to expect next week. Now, I'm currently on the daily time frame. This is the Euro USD. If you're looking at the chart now, you'll notice something. I had to place in the period separator, so I had to place the trend line just to separate weeks. So this is just from this point here to this point here connotes 1 week. From this point here to this point here is another week, and from this point here to this point here is another week. So let's just quickly look at what has happened so far and what you might expect. Remember, initially, in my private mentorship, I told them something. I said in the month of August, Euro USD to be particular, they do range, and as we step into back September October, we should expect another trendy move, and actually we've seen it. We're already in a trendy move, though this week to me I don't was actually a mix of profits and loss. But that being said, for now let's look at what to expect after the FOMC and federal funds rate and other stuffs. So let me quickly jump down to the 4 hour time frame, and on the 4 hour time frame, let me just bring it this way. Okay, let me start from this very point here. Now, if you look up here, you notice something. We had an unmitigated zone around the 22nd of August. So the market actually stepped into that zone just to mitigate the orders resting there. And that being said, we had a fall through to this very point. So along the side, there is this other block here, and the market broke through the other block here, making it a breaker block. Now, that being said, so already at this point we have an unmitigated breaker block. That's I use the word BB to actually take note of that breaker block. So the market at those very points stepped into the breaker block, and before the market, as the market stepped into the breaker block, down here we equally had a zone, a fresh zone, a demand zone which has not been mitigated. In other words, it has remained unmitigated. The market likewise stepped into that same zone this very week. So, and this very week, the market stepped into that same zone. The same market returned back into that very breaker block, because at this point it was just an OB, which is you can equally call it is just a block or just an other block or a zone. So at this point, it was just an other block. The moment price stepped into it and then broke through it, it became a breaker block. Remember, when a breaker block is being violated by price, it becomes a breaker block, and we do expect price to retrace back into those breaker block to mitigate every order resting there, or let me say tap into the zone and then pick up orders that are resting there. So the market along this side returned back to the OB, returned back to the breaker block, picked orders and went through. And the same thing reoccurred here. This was an order block, or in other words, a demand zone that price violated along this line, and price still came back into it to pick up orders and continue the move. So almost what happened here. Now for this week, what are we to expect? First and first, I had to plug in my Fib and my Fibonacci retracement tool. And on the Fibonacci retracement tool, you notice something somewhere around this figure here. I will be looking at I think 98400, somewhere around 98400, because 98400 is a round number, so to some extent it will hold as a resistance. And one of the forex foundation courses that I uploaded on YouTube, I think I did justice to that, round numbers and psychological numbers, those stuffs. So 98400 actually aligned with the 71% retracement on the Fibonacci retracement tool, and that's 71 0.721. ICT makes reference to it as optimum retracement, no, optimum trade entry, the OTE, optimum trade entry. So that being said, I'm not actually trying to bring you down with so many grammars or teachings from various people, but this is just what to expect this week on Euro USD. So for next week, I mean, what to expect next week on Euro USD so far. So that being said, this is actually 0.98400 is actually a round number, and it actually, should I say, aligns with the 71% retracement on the Fib. So what are we going to be looking at now? Now we'll bring into consideration the concept of premium and discount. Now, if you are buying above if you are trying to sell above 70% of the fib retracement to, remember, I apply this fib retracement to the daily time frame. Let me show you something. Let me show you something. So if you watch the chart now, you see that there is the daily. I'm on the daily chart now. So I took into consideration the last block or supply zone down to the recent low the market has made, with the recent structural low, which is this very point, and the most recent structural high, which is this very point, and it's a zone. If you are looking at the daily time frame, around here we had another block, which is a demand zone, and price at this very point, after violating it, it turned to a BB prior, stepped back into it. So at this point, we're looking at the recent structural high and structural low. So this is the recent structural high and this is the recent structural low. I put in my fib into it, and now when you are within a recent structural high and recent structural low, you'll be safer if you are trying to buy if you want to buy from 25% down, and if you want to start selling from 71% to 100, from 75, from 71, 70 to 100. At least you are taking into consideration you are trying to buy at a discount, and you are trying to sell at a premium. If you want to buy, make sure you are buying from 25% to 0, and if you want to sell, which will be serving 25% to 0 is serving as the discount. And when you are using a Fibonacci retracement tool, and when you are selling, it is best to sell from 70% to 100 at least. When you are selling from 70% to 100, you are selling at a premium. So that being said, because one law which has actually proved itself to be a blessing in trade is that you buy low, you sell high. So it is best to, first of all, you ascertain your structure high and the structure low, and that must be the most recent structure high, most recent structure low. And being that the daily time frame usually have a lot of eyes on it by the big players, the market makers, the big people with the deep pockets. That's why we are looking at the daily time frame. So since we've plugged in our fib into the daily time frame, and we have seen one or two things what to expect, now we'll have to jump down now to the 1 hour to refine every possible stuff. Now on the 1 hour now, if I get if I get a close above these very points now on the 1 hour, I will likely look for a buy scenario, and the buy is going to be short term, because I'm going to try my best to buy from this point into this zone here now. Anything around 70 to 100 is a safe place to exit your order. So we look forward to exit our orders around the zone. Now, if you're looking at the premium zone, which is this 70 to 100, you will notice something around the premium zone. We'll have this kind of two unmitigated order block. Let me remove this so it will be clearer. We had these two unmitigated order block. We had we have one here, it has not been mitigated by price, and we have another one here which has not been mitigated by price. So we're looking at price to step into either of these two. Now, in a scenario whereby you are not sure if price may get into this, but you are sure that price may get into this, you will use your fib to bring in the two. You use your Fibonacci to capture in these two unmitigated OB. And if you capture these two unmitigated order block, you should be looking at taking the equilibrium of it, which is when you take a consideration of the full range of the zone, you look for 50% of it. So, and 50% of this very two unmitigated order block is going to give you, look at it here. Going to give you around this point. And around this point, let me go to the 15 minutes because we're trying to refine it. It's going to give you around this point. And if you are looking at around that very point, you will see that level we might necessarily get a raid because on the 15 minutes you equally see an unmitigated order block here. So, and on the 15 minutes, if you're looking at the 15 minutes, you discover that we have an unmitigated order block here. But around this point, there is no imbalance contained in it. But what do you think we might get? We might get a raid. We might get, let me say, a raid of this level. We might get a raid of this level. And the moment we can get a very nice raid of this level and a change of character around this equilibrium price, I'll start looking for a sell. Remember, for you to be safer in the market, please don't predict or try to forecast the all through move. You just react to what you see. Now, what I've just done is, should I say, I will best make reference to it as an anticipatory move. What may happen in the market? And in the case it does not happen that way, I trade what I see. Yeah. So from this very point now, we should be looking at taking out this low. From this very point now, we should be looking at taking out this low. So currently I'm on the 1 hour now. So from those 50% of the imbalance, 50% of the FIB2, which will serve as the equilibrium price. Let me take this out first. Okay, sorry. From the 50% of this FIB, when I take into consideration these two unmitigated zones on the 1 hour, I will be looking for a sell. And if I capture a sell at this very point, remember, before I capture a sell at this very point, I must wait for a change of character to occur on the 15 minutes. And when a change of character has occurred on the 15 minutes, I'm going to pull through from these very points down here. Now, the only thing that will cause the market not to go this way is if there is a fundamental that is being released that happens to be strong enough to cause the big players to change the course of events. Anything outside that, if everything still goes with the flow of what it is as it is now, as it relates to the fundamentals, this is what to expect. Now, remember, if you are buying within this trend, you are trading a counter trend. That's why you must be very careful. You lower your risk. But if I go over my 15 minutes now, let me show you something. If I go to the 15 minutes now, if I at the 15 minutes, which are currently I'm on the 15 minutes, if I get a close, a candle body close above this level, I'm going to buy all through into this very block here. Yeah, I'm going to buy, if I get a close above this very block here, which is 97181, I'm going to buy, and I'll hold through till I get into this very zone here, and I'll feel okay to exit. So that being said, at this very point, this is what to expect. And if you capture a sell on these, and if you capture a sell along this very area, what are you to expect? You expect that sell to hold through until this low is being cleared. And believe me, that's going to be quite some people. Let me just measure from this very point here now. From this very point here now to the low, that's going to give you 186 pips, 186 pips. Now, let me go to the 4 hours and show you what price has done so far this week. So far this week now, market actually went crazy. We had them 378 pip move. Believe me, that's too much. That's too much. 300 and it's 3 pip move. Now, another reason why you should be looking at this range for price is this. Let me bring in my FIB2 and measure the average move for price this week. Oh no, this is not what I wanted. Let me take this out. Where is the FIB? Okay. So if you look at, I think the chart is almost getting messy. Sorry, let me take this out so I don't like messy charts. Let me pull this here now. If you look at this very the high of the week and take a consideration alongside the low of the week, since the sellers are in control, another good thing you have to do is you ask yourself, wait, let me take this out. The chart is almost looking messy. If looking at the another good way to know what to expect in after a massive trending move like this in a week. You take the high of the week and the low of the week, and you look for 50% of the high and the low of the week. Now, currently, we know that sellers are in charge. This is a bearish move. Now, we have gotten the high of the week, we have gotten the low of the week. We look for the equilibrium price of the week. So the equilibrium price of the week is 50%, and that's around 0.98584. Now, the succeeding week, which is going to be next week, we should be asking ourselves a question like, since sellers are in control, the best place to start looking for a sell is wait for price to retrace into 50% of the whole price range move for the week. And the whole price range move for the week, pay very good attention. The whole price range of the week is 9854, around this very point. And if you trace it all through, it's going to give you the equilibrium price of the two unmitigated zone. I just dropped a very big and a massive trading secret here. A very big and a massive trading secret. Please take it to heart. And so somewhere around this very region now, you should be looking or anticipating a sell. And the sell is going to be massive. It may repeat a measured move. Implication, it may give you another 300 and something pips, but in view, I have a minimum. I'm targeting a minimum of 200 pip move in view. So just to see how next week goes. So at this very point, this is me telling you, thank you. Have a nice time. Backtest, look at your chart. Backtest, look at your chart. Pushing you all the best. Thank you at this point.